Global growth in 2019 is going to be slower than 2018 at 3.6%. More than 60% of global growth comes from Asia, and within that, more than half from China. But it's not just the China story. It's also India growing more than 7%, the ASEAN region growing over 5%. And these are economies that are more significant in terms of their momentum driving global growth than they have been, say, 10 or 20 years ago. There's no question that the US-China trade war has created a lot more uncertainties than anyone expected even 12 months ago. But the latest news trend has been suggesting we're going in a more positive direction that should mean that we come to a more prolonged truce that helps support sentiment during 2019. Even in a case of a negative US-China trade war, there will be some selected winners as well as losers along the way. Of those potential winners, top of our list includes Vietnam, Malaysia, and Mexico.
We have felt for a while now that the US dollar was overvalued and emerging market assets were undervalued. We've seen a number of catalysts which should weaken the dollar and support emerging market currencies. But it's not an all clear for all of EM. The outlook for Asia is probably more positive, in our opinion, than the market consensus. There is a lack of inflation, which means that central banks are not under pressure to tighten monetary conditions, and so we're constructive on Asia more generally. We're still focused on high-quality, high-yielding assets in Asia, so we prefer India and Indonesia at the expense of countries like Korea and Taiwan.